simple math, say 8 million people were impacted. I don't know about you, but shouldn't that be on the evening news? Shouldn't that be everywhere? The short-term rental craze is going to be a big driver of this fraud. FHA product has doubled since 2009, and that's low credit quality borrowers. These programs were being used for investment loans, and there was fraud being committed. This stopping, it could really start choking up those capital markets.
What's up, guys? I'm Nobody Special, and I have a special guest with me today. First time on the channel, we have Melody right here, who is strategist, writer, technologist, and she has a specialty in mortgage and mortgage finance. And Melody agreed to do this interview on a couple of seconds notice pretty much this morning because I knew there was something going on in the mortgage industry. There's a lot of stories hit the tape in the last day or two, and I don't really know what's going on here. It seems like nobody really knows. But Melody, you did a video yesterday that was excellent. You seem to have a pretty good handle on what's going on in the mortgage industry right now. So Melody, how are you doing this morning?
I'm doing well, thank you. But like you, I'm kind of on fire from what's been transpiring over the past couple of days. So,
yeah, I don't know much when it comes to mortgage finance. I know just enough to be dangerous, but I also know just enough to know maybe something's not quite right at the moment. Now, I'm going to first of all, let me share my screen with you here. This is Melody's YouTube channel, Melody Wright. Highly recommend that, guys. I'm going to put links down below in the description. You can check that out. I highly recommend you subscribe to this channel because I suspect in the weeks ahead, you're probably going to need this. And Melody also has a Substack. She's M3 Melody at Substack, which I am also a member of. Highly recommend that. Now, Melody, if we go and we look into mainstream finance this morning, we get stories like CNBC's talking about how mortgage rates plunged, demand is finally inching back. Makes it seem like everything's great in the mortgage market. And then we go to Bloomberg, same thing, 30-year tumbles by the most in more than a year. Mortgage applications for home purchases rose the most since June. It really seems like, hey, things in the housing market are turning around. They're great. But then there's these other stories that are going on kind of behind, I don't want to say behind the scenes, but kind of in your lower tier news outlets. First of all, we got this one. Mortgage giant Mr. Cooper shuts down systems following a cyber attack. And I just got done watching a hilarious video that Amy Nixon posted of this guy who's just cussing up a storm about not being able to pay his mortgage and how did he even end up at Mr. Cooper. Saying what we're all thinking out loud with some colorful language. What happened at Mr. Cooper? What's going on here?
Yeah, so we don't know a lot. There was an October 31st filing, 8K filing, that they had a cyber attack and that they were shutting their systems down to keep borrower information safe. They have between 4.1 and 4.3 million borrowers. I've spoke to clients yesterday as well. They got alerts, and the fact is Mr. Cooper is not bidding in the correspondent mortgage market. They're a big player there. My clients sell to them all the time. So this is kind of a big deal. We haven't gotten any updates from the company. There is some information on their website that they're taking payments again. I heard that from several different followers earlier as well. But I talked to people yesterday that were told yesterday not to make payments. So it's kind of like the fog of war. We don't know for sure. I also had someone tell me that they called the capital markets desk at Mr. Cooper and they said everything's fine. I pushed back and said, what does that mean? Is there a client alert? Because I saw the client alerts yesterday that said everything is halted till further notice. We don't have a lot of new information, but guys, when 4.3 million borrowers, and if we think about households, we have about, each household has about 2.6 people in it. Just think about the impact this is, and we're not seeing anything on mainstream media. That's the most concerning to me.
Yeah, and that was really the gist of that guy who was, yelling into the universe about Mr. Cooper. 4.3, 4.1, whatever the number is, million people can't pay their mortgage. Let's not act like that's not going to cause a problem. From the mainstream press.
Nothing.
Now, we also had late last week, we had that story about how direct deposits weren't going through. The ACH system went down. Am I trying to make dotted lines that don't exist here? Or do you think that had anything to do with this? Or
Well, if it didn't, I mean, that's even crazier, right? So, but it definitely, I'm not buying the individual user issue unless it was truly a hack that, there were something coming from someone that had been impacted that, caused the problem. But the fact that Bank of America was still not able to get, a direct deposit, I think Monday. So there's something bigger going on here. And in that kind of system, the idea that an individual submission would cause that kind of problem should make us all very concerned. So if that is truly what happened, then we should be actually more scared. I have to be honest. Yeah.
Yeah. I mean, so, okay. One guy fat fingers a data entry and all the big banks you can't get paid. Okay.
Our biggest banks, right? Yeah. And a system that works like clockwork, forever. Like if you've ever gotten a direct deposit, this is something you can pretty much rely on. So this is, again, we should be more concerned with that narrative. If that is the case, it means that, that is very vulnerable system.
Yeah. Now, I don't want to get too conspiratorial. I've got my tinfoil hat here in reserve if I need it. Sure. The state of things geopolitically, obviously not very good. Is it beyond the realm of all real numbers that some kind of a cyber attack or thing could have happened with ACH? And if it did, would we know about it? Or in order to maintain the illusion of strong and resilient, would they just say data entry?
Yeah, I don't think you're making a leap at all. I mean, we have to take that into consideration. I mean, especially if we look at BlackRock and their political ties, which if others don't know, the majority shareholders in Mr. Cooper are BlackRock and Vanguard, and BlackRock has deep political ties to the current administration. BlackRock has kind of been called they come in to help with all the distressed asset sales. So for instance, they're doing a lot to help with, some of the distressed assets from the March banking crisis. So I don't think that's tinfoil at all. These are highly connected individuals to the current administration. And then of course, our banking system, what better way to make us feel more insecure here in the United States? So I think very much we have to consider the possibility. This is a kind of a targeted attack based on foreign actors. But no, we won't hear about it. I used to work for someone who sat on the intelligence committee for 18 years. We're not going to hear about it. So, and if we hear about it, it'll be later. Again, not trying to scare anyone. This is just the reality that I think we have to be cognizant of the probabilities, because guys, all of our money is in those banking systems, and I don't want to cause panic, but at the same time, what would you do if you weren't able to access your check for 2 to 3 weeks or 4 weeks or longer? So I think we have to be realistic that these things could be, motivated by what's going on geopolitically.
Yeah. On Friday you couldn't get paid, and by Monday you couldn't pay your mortgage. That's millions of people.
That's right.
And I'm sure somebody's going to say, we're just flooding here. We're just trying to cause panic for clicks. I get it all the time. Millions of people couldn't get paid, and then they couldn't pay their mortgage. Nothing to see here. Move on. Strong and resilient.
I mean, if you think about it, so we say 2.6 people is the average per household. That's let's just simple math say 8 million people were impacted. I don't know about you, but shouldn't that be on the evening news? Shouldn't that be everywhere? And that is what is just so striking about this story. I don't care if everything goes back to normal tomorrow. To me, something that impacts consumers so close to the heart of not being able to pay a mortgage payment, I don't understand why that wasn't all over mainstream media. It's a human interest story, if nothing else, right? Yeah. So, sorry.
The top story this morning is Grand Theft Auto 6. If you go to the financial press, they're talking about a video game release. That's great.
Well, and the headlines on Bloomberg were about the election and abortion. Financial media. I don't understand. So,
yeah, well, that's the issues that make us hate each other and make us fight. Whenever there's something they don't want us to know, you'll get that front and center. Nonstop, some trial or some.
Yeah. And yesterday was China. Yeah. So
speaking of stories they probably don't want you to hear about, here's another one. Again, we're drinking from the fire hose today when it comes to the news. Freddie Mac halts deal making for Meridian Capital and launches probe. What's going on here with this one?
Yeah, again, we don't have a lot of information. The only people that are picking it up are the industry publications and this small. But, what I found so fascinating at the end of this story was that, this Meridian Capital, which I think the former CEO of Freddie is a part of this, but they were their top originator for these multifamily commercial loans for the last 7 years for both Freddie and Fannie Mae. This is a big deal. And so the fact that they can't do any deal making, that's going to be impactful to the capital markets as well, because, these securitization markets, they work on the deals. The deals have to keep going. And, for anybody that was around during the GFC, a lot of former Bank of America people came to my company and would just tell me these stories about, net income's coming in at, negative X. We got to throw together some securitizations like this, and we got to, get that gain on sale from those deals. And so this stopping is going to it could really start choking up those capital markets, that including Mr. Cooper not participating in them as well.
So for some of the folks who maybe don't live in this space as much and don't know some of these phrases, right? You've got deal making, you've got originator. Let's say we're talking about some company, they just built a big condo complex and they went to Meridian to borrow the money. How does that work through, and how does Freddie get involved, and where does this story kind of disrupt that?
Yeah, so Meridian would have been making that deal to then sell or deliver it to the GSEs, to Fannie or Freddie, so that they could securitize it. And so let's say you are a developer, you're working on a loan, that you want to get that Meridian is brokering. Meridian's probably turning around to you today and saying, or a few days ago and saying, sorry, that's not going to happen. Or worse for them, to be honest, they've already made the loan. So that I'm sure there's a portion of their book, it's called Held for Sale, that got interrupted, that they were in the middle, because these are kind of like, think of like a pipeline. They're always in the pipeline. And so there are a bunch of deals, I'm sure, in pipeline that they're not going to be able to deliver to the GSEs. And so they're going to be on the hook for that, which is going to be a crushing event to that firm.
Okay, so Meridian lends the money to the developer to build the project. Meridian makes the loan. Now it's their asset. They turn around and they sell the loan right away to Freddie Mac. They get their money back so they can go back through the pipeline, make another deal.
That's right.
And then Freddie Mac breaks it up into pieces or puts it into a mortgage-backed security or a commercial mortgage-backed security, sells it off to the bond market. It ends up in your retirement plan.
That's right.
So Meridian, they messed up somewhere, or they're under investigation. Nothing has been proven here. I just want to emphasize that. And Freddie has said, you know what? We're going to put you guys on hold while we take a hard look at what you did. Yeah. And so now Meridian can't make more deals.
And that's correct. And then there's larger implications too, because so how the GSEs got through the crisis last time, how they got through the last few years going gangbusters, are these things called repurchases. And so what they'll do is, essentially they'll go back, they'll investigate in any of these deals that didn't meet their requirements. And sometimes this can be just as much as not dotting an I or crossing a T. I'm exaggerating a little bit, but it's something very administrative. They will turn around and make that company repurchase those deals. And most of them don't have that kind of liquidity. They might have a facility that they use for that. But in times like this, when access to credit is being limited, those facilities get used up very quickly. And I'm talking about a lending facility. Like, think about a big line of credit kind of that they use from the banks.
Okay, so let's extrapolate that a little bit. Say Meridian did mess up on a loan. The article mentions one loan. And one loan officer who's been put on leave, right? So, okay, again, one guy with fat fingers, right? Again, there's that same guy again. This must be something going around. Right. So say Meridian messed up, and they messed up on a couple of loans. Freddie can come and say, Meridian, you have to buy these loans back.
That's right.
And Meridian either has to have the cash on hand, or they have to go borrow the cash from somewhere else at a time when cash is pretty expensive, right? Interest rates are pretty high.
Yep. Yeah. And I don't know this business model well, but often there's usually a counterparty behind the counterparty. And so then they'll turn around and say, nope, okay, now you have to repurchase that. And then that counterparty turns around and says, well, I don't have any money. So it then just becomes like this chain effect. And so it's always the counterparties that you don't know about that sort of start the fire.
Now, you survived, you mentioned on your Twitter handle, what did you say? GFC 1 survivor.
One, yeah.
So that is suggestive that there will be a second, which I agree.
Yes.
I'm kind of getting shades of summer 2007 here from this story. Is that, am I looking too far into this, or is this kind of reminiscent of what you went through back then?
Yeah, I wish I'd been more aware. You know what I mean? Like I was sitting at a mortgage company. Everything was going absolute bananas, doing millions of write downs a day. So I wasn't as aware as what was happening to other people. But to me, yes, this has the potential with kind of these little strings that most people don't understand to create a very similar type credit event that we got in August of 2000. That later, that year. And so I think, we just have to sort of, we need to be paying attention, because I said today on Twitter, this is kind of stories that look like nothing burgers until they're absolute something burgers. And I think that, yes, I don't think you're off base there.
And, you mentioned the counterparty risk and the counterparty to the counterparty. And once the rumor mill starts going, if you will, whether there's something here or not, right? Regardless of what kind of burger it is,
that's right.
People are wondering. And when people are wondering, they start to get defensive. That's right. And brings us to our next story. Just came out yesterday. Fannie Mae subjects broker-involved agency loans to pre-review. What's going on here now?
Yeah, this one I'm very, very curious about. But the idea is that, essentially, if you're attempting to broker a loan, then there's going to be a pre-review. This is something no one wants. Absolutely no one. Because the way the machine works today is that, it goes very quickly. You can get that money very quickly. And so the fact that you're stopping to do something like a pre-review, that's going to choke markets as well. Because typically, Fannie will give you like this delegated authority to be, and so it's like a trust, like, oh, we trust you. We're going to do a post QC or quality control of your work, and you're subject to repurchase. But most of those lenders are delegated to the point that they can just deliver out to the market. Delaying any of this becomes a liquidity challenge because people are addicted to that gain on sale, that income they get when they sell these deals to the GSEs. So slowing that down is going to start to show cracks and crevices in their sort of their liquidity makeup. They're going to be having to use more cash. They're going to have to be going out to get more cash. And it's the same trigger event that we were just talking about. So
again, it kind of sounds like you mentioned slowing a few times there. The music slowing. I'm getting shades of margin call. The music slowing. The loans sitting on our books longer than we would like them to. So, correct me if I'm wrong here. A broker is brokering a deal, kind of like Meridian, right? Not Meridian specifically, but someone like Meridian. And now, before they can just take that loan and sell it right away to Fannie. Fannie is saying, before you make that loan, I need to approve it. Is that correct?
That's what I'm reading. I need more detail on this to know exactly. And hopefully I'll get some more today and can share it with you. But that's what it sounds like. Okay.
And again, extrapolating here, do you see this as a coincidence that this comes out right with this Meridian story?
The same coincidence that the FTC came out on Friday and said, all non-banks have to, report cyber attacks within 30 days. And then we hear about the Mr. Cooper hack. I mean, it's just, yeah, sure.
All one-man data entry errors must be reported in a timely fashion. Yeah,
exactly. In 30 days, because that's going to help. Sure. Okay, got it.
All right, moving on. Again, we're drinking from the fire hose today.
We are.
DTCC, all right, the Depository Trust Clearing Corporation. These guys run the plumbing of the financial system, right? I probably couldn't explain what DTCC does, just that most of these transactions run through them one way or another.
That's
Now,
right.
this notice came out yesterday, and there's so many phrases in here that I don't understand, but I'm told what this is telling me is they are increasing margin requirements for borrowing against mortgage-backed securities.
Mm-hmm.
Could you talk a little bit about what's happening here?
Yeah, so same. That's what I'm hearing. That's my understanding, but I don't have any more information. I tweeted out today hoping to get some insiders to tell me what people are thinking about this. But this is very concerning. It's kind of like, okay, as we've been talking up to this point about how the music's slowing, right? And things are getting harder and harder. Now, I mean, it's even harder because you're going to have to pledge more assets to get what 50% yesterday you had. So this could really create some downstream implications. This November 20th date, I'll be curious to see if they stay with this date. But again, we don't know a lot. It's a lot of confusing terminology, but what it seems to signal is that if you are going to play, you're going to have to pay more. And that's just going to be another stressor on the system.
Okay, so say I am one of these institutions that does business through the DTCC, and I borrow cash and I use mortgage-backed securities as collateral for that loan. Say I had $1 million of mortgage-backed securities and maybe I can borrow $800,000 yesterday with that. Now they're saying you can only have 600 or, maybe forget the numbers here. Don't get hung up on that level. But is that kind of what they're saying? We're only going to lend you a little bit less cash than we would have otherwise.
That's my understanding. And that asset that you have to, so if you really need that cash and you need to go grab another asset, that's an asset you can't pledge elsewhere. And this is definitely what happened to us back during the GFC at my company, is suddenly, we felt we had plenty of funding. And little things like this started to happen, and we started playing, grabbing assets, pledging them all over the place. And then ultimately, we quickly breached our tangible net worth covenants because of these types of things happening in the market.
So let's say you're a hypothetically Meridian Capital, and the scenario you described where you need to do a buyback because Freddie investigated your loan, found out one-man data entry error. Now you got to buy back these loans. You don't have the cash. So you're going into the market to borrow cash in order to buy back these loans you have to. And you're putting up, say, hypothetically, real estate debt as collateral to borrow that cash. Well, now your access to that cash is limited. So This seems like another domino, or again, the timing, all of this happening within a few days of each other. The music's slowing, isn't it?
Yes, agreed.
All right. And then now the last story that we had, well, no, not the last story. There's so many, I can't even keep track of them. We had this one came out. Now, this is this report from the Philadelphia Federal Reserve. This report was published in January, but I've noticed a lot of people bringing this up on Twitter recently, this owner occupancy fraud associated with mortgages. And this is making the rounds right at the same time all of these other stories are going on. Could you talk a little bit about what's going on here with this story and the risk that this poses?
Absolutely. So, what everyone kind of needs to understand is those 2 years, that COVID boom in mortgage was so chaotic and so crazy, and people were working 20 hours a day. And when that happens, things, you kind of lose, you get the train kind of like runs off and you can't really catch it anymore. And so the other thing people kind of need to understand is that we changed our product mix from the GFC from private to kind of FHA product has doubled since 2009. And that's kind of low credit quality borrowers. And what's been happening even before 2019, and that's what this Philly Fed study is talking about, is that these programs were being used for investment loans. And there was fraud being committed because when you do one of these programs, you have to sign an affidavit that you are going to occupy the property. And so what this study says is that, the potential for non-owner occupancy fraud in these markets is massive, and it did not stop after the GFC. And what concerns me about this study is that in reality, this study kind of goes up to right before the COVID boom. And so I have a feel, and it also goes into the details that we have to assume that the investor activity was much larger than anyone is claiming, because today we get data like it's called HMDA data that'll tell you, was this an investor loan or not? Those, look anywhere between 20 to 30% in some markets. What this study kind of says is, no, you have to say that's more like 50% based on kind of the fraud that we saw.
So we had, and this is prior to the COVID boom. I didn't even know that. So this isn't even looking at what's happened in real estate since 2020.
Right.
There's some statements in here, fraudulent borrowers. So people check the box. Yeah, I'm going to live in this house, when really they were buying it, intending it to rent it out, whether long-term rental and Airbnb. Right. They're saying these fraudulent borrowers perform substantially worse than similar declared investors, defaulting at a 75% higher rate.
Right.
And they're also saying accounting for fraud increases the size of the effective investor population by nearly 50%.
Right.
So there's a lot more landlords who borrowed money claiming that they were going to live in the property when really it was an investment.
That's correct. Yep.
Now, do you think things like short-term rental bans going on in cities all across the country? I mean, I had Travis from Real Estate Mindset came on my channel a few weeks ago, and we went and looked at Airbnb and Verbo listings, and then we compared it to MLS.
Yeah.
In a city like New York that just passed what is effectively a short-term rental ban, there are 2 or 3 times as many short-term rentals on the market as there are total houses for sale or for rent combined.
Right. And then there's some cities that's like 9 to 1.
Yeah.
So I do a whole listing of the 70 plus cities I track with those metrics specifically. So absolutely, this is exactly what happened. And so kind of, people got in probably between 2013, 2019. They probably use these loans because you can get like a put 4 to 5% down, credit score of 580. And can take these loans out, at very cheap rates. And they took them out to repurpose for long-term rental. But as people started to see during COVID that you could make more money on short-term rental, and this before markets became completely oversaturated, a lot of people moved from using these for long-term rental to short-term rental. So absolutely, the short-term rental craze is going to be a big driver of this fraud that, we've only started very small cases, but, from what we're seeing right now, this is going to be much worse than the GFC from a fraud perspective.
Worse than the GFC from a fraud perspective.
That's right. I'm sure I'll get some hate on that, but yeah.
I feel like we all need to take a minute and really marinate on that, because wow.
The lawyers are going to get real rich again, so there's I'm seeing crazy things like, 2 deeds being recorded within a span of days, one for a hard money loan, one for a mortgage, just because the counties have delays in recording, so you can get away with that. There's the exuberance of the COVID boom. That is, and the fact that it happened in such a shorter time period, and then you put on top of that the PPP loans and all the stimulus that was coming in, it absolutely is going to be worse. So
worse fraud than the GFC. So maybe this time around 2 people could go to jail as well.
That's right.
Oh wow, that's
right.
Okay.
One little quick note, if we have time. One thing that people don't understand is, like, when you take out a FHA loan, what happened during the COVID crisis is you could then, if you were delinquent, you could take advantage of the COVID forbearance, which was 18 months of stop payments. But then as your workout, you did something probably like the COVID partial claim, which is kind of where you take all that amount and put it at the back of the loan. But what that meant, if you were non-owner occupied and you took that partial claim, that's what we call, that's a violation of the False Claims Act. And so they could actually come after individuals, so that is something I'm very much looking out for, the fact that, I think some of these people are going to get into trouble.
And, I come from New Jersey, where Hurricane Sandy hit. I was about 10 miles north of where the eye made landfall, and they are still prosecuting contractor fraud from all the people who made false claims of being contractors and took money and never did any work. Here we are 11 years later. They're still prosecuting that. They haven't even scratched the surface. We've got PPP fraud. They're just now starting to prosecute that. They're going to be prosecuting those for probably the next decade, maybe two. And so now we have this FHA and people who took COVID loans or, signed up for a mortgage, pretended they were going to live in the property. Really, they weren't. They bought it to Airbnb it or to be a landlord to rent it out. They immediately signed up for forbearance, so they never made any payments on the property. Right. Now those properties aren't cash flowing. What a mess.
It's a mess. It's a real mess.
All right, and the last one. This one just hit the tape today. U.S. calls for new limits to Wall Street bank backstop after the March crisis. And they're talking about federal home loan banks here. The regulator wants more FHLB focus on housing and not failing banks. What's going on with this story?
Yeah, so been a lot of stories about how FHLB kind of went off the rails from what it was originally intended, which was to kind of backstop the mortgage market. And a lot of these smaller banks were really using these borrowings for other purposes. So what they're saying here is that they want to kind of bring it back on the train tracks, and they want to, perhaps have a rule around how many mortgage assets you have to have on your books to be able to access the cash. And, mortgage assets have a tendency to have a higher risk weighting for Basel III, which is kind of a regulatory framework. So this to me, what I don't know is when this would be enforced, but this to me is a warning that's a shot across the bow to a lot of these institutions that have been accessing these borrowings to kind of, fuel their operations, that cash is no longer going to be available, and beware. And so again, it's just another strike when people are needing to be able to access cash. Weirdly enough, Chase was actually the largest advance holder from the FHLB. And I think that's largely had to do probably with their acquisitions of the failed banks. But this is important. This thing, they called it the lender of second to last resort. And I think most of us absolutely have no idea the importance of this this funding in our markets, but we're probably going to soon figure it out. So
you caught me off guard there when you mentioned Chase, as in JP Morgan Chase, as in the biggest bank in the universe.
That's correct.
Who is getting bigger as other banks fail. So JP Morgan Chase went to the federal home loan banks, whose job it is to make housing more affordable. Great job. Keep up the good work. And they borrowed money to be able to buy up the assets of, I'm assuming you're referring to First Republic Bank here.
Yeah, they didn't use it to buy them, but they're borrowing from, they're getting those advances now. And I again, this is something you cannot find a lot of information about, but I think it largely has to do that they have to do that because that's how those assets that they acquired, in the spring were already being funded before they sort of took possession. And so I think that they're kind of a proxy now, but the number one. So again, this is something I'm still researching. I don't have a ton of information, but I tweeted out probably a month or so ago, does anybody know why Chase is taking all these advances? And I got no response from even people that I think are deep in these markets. And so I think there's some things we don't know about. I think, them signing up to the Fed window, Jamie Dimon selling stock. I mean, the banks we got to stop singing that credit quality gospel singing because they're in trouble as well.
Yeah. Strong and resilient banks. That's
right.
And we're not allowed to say anything otherwijs.
That's right.
You got to start every hearing, everything. Just remind everybody how strong and resilient the banks are.
That's right. Mm-hmm. Yeah.
Now, also, if the FHLB is taken away, which is, usually a small bank is already pretty desperate if they're heading to the FHLB. And now it sounds like in order to be able to access, they would have to have more risky assets on their balance sheet, which would just make their situation worse. So if they can't go to the FHLB, next stop is what? Bank Term Funding Program, Fed's discount window? Where else can they go?
Yeah, some of them nowhere else. and so, this is definitely a thread for people that are diving deep into these smaller banks and looking for the next casualty, because they don't have the, and you did such a great story on that that Iowa bank, Citizens. Thank you for that. But just like you found, like, wait, well, how could this even possible? They lost this much money. But this is the thing, when you want to go research these banks, look at their borrowings. I mean, that is the key to everything, and it'll tell you what's really going on.
Yeah, that Iowa, what was it called? It was Citizens Bank of Sac City. I was shocked to find that, because when I first heard about it, okay, they lost all this money, it's got to be crypto or commercial real estate. And then it was Bank Reg Blog, another Substack, who found that it was commercial trucking. And I'm like, oh, okay, banks are failing because there's nothing moving on the highway. Well, what a wonderful economic indicator that must be.
That's right.
Wow. Yeah. Well, Melody, I want to thank you so much for taking the time to talk to us, especially on such short notice. I mean, I think it was like an hour and a half ago that I reached out to you on Twitter, and here we are. And, we've been talking for a half hour of that time. Wow. Great stuff here. Thank you for your coverage. You are doing a better job talking about this and drawing attention to this than the mainstream press is, who wants you to focus on some other shiny thing elsewhere. Real quick, what does this look? Give me like the high level. What do you think this looks like a few months from now? Where are we going here?
Oh boy, there's just so much to choose from, right? Like what's going to happen geopolitically. But, I am feeling very nervous about our banking system. I'm feeling very nervous about a kind of mortgage assets. And so I think, it could be that this goes away. We hear nothing for a couple of months, but it doesn't really go away. But I think the path to me is very clear. We don't have the liquidity that everybody thinks that we do. We don't have the strength in the balance sheets that everybody else thinks that we do. We heard yesterday about, these synthetic risk transfer products that are getting going. Nothing is different. I think that is what everyone needs to know, that just like we didn't understand exactly what was happening late 2006, 7, 8, all the way into 9, even 10, things are going to sprout out, like fires are going to start all over the place. And, just we need to be clear-eyed, because I think they're pretty much related, but it all comes back to the collateral shortage in the system. And we just aren't as strong as people are making us out to be.
Well, thanks again, Melody. I really appreciate that. Excellent stuff. Once again, guys, check out the links down below. I got links to Melody's YouTube channel, to her Substack. I highly recommend both. I subscribe to both. There's great stuff there. Also, check her out on Twitter. She's very active on FinTwit, and some interesting stuff going on. We'll stay on top of this story as best we can, guys. And until next time, live small and dream big.
Thank you so much.